Tesla hinted about the possibility of a stock split recently. The electric car manufacturer gained notoriety when it declared that it will ask for permission to divide its shares later this year. Is it time to buy something? Despite the fact that the proposed split is still in its early stages and that there isn't much information available about it, Tesla's stock price has increased since the announcement in late March. According to experts, it's nearly hard to forecast if the upcoming stock split will have the same effects as the previous one, which occurred back in 2020. If you've been debating whether or not to buy in Tesla, when is the ideal time? If you are going to invest, when should you do it? To find out, keep watching. A company that splits its shares into smaller values lowers the price of the stock. This is known as a stock split. If Tesla decides to perform a 2-for-1 stock split, for instance, twice as many shares will be available at half the price, or $500 per share, given that the stock currently trades for approximately $1,000 a share. According to experts, stock splits have no effect on the stock. The company's market value is unaffected. The split will result in extra shares being distributed to current owners, but the stock's total value will stay the same. Nonetheless, they could attract investors with little funds to expensive equities. $1,000 for a single share of stock is out of reach for a lot of individuals, but it might be more accessible to the average investor if the price drops to $200 per share following a stock split. So in terms of the stock's true value, what impact does the timing have? It makes a little difference if you purchase it now or wait until after the split. Investing at a cheaper price doesn't always mean you're getting a better deal, because stock splits don't impact the company's valuation. All it does is give you a smaller share of the business. In essence, a stock split is a way to make existing shares more easily available by splitting them into smaller portions. As a result, the stock price falls and the total number of outstanding shares rises. Slices of freshly baked pizza are comparable to this. While dividing the pizza into pieces facilitates sharing and eating, it makes no other changes. What does a split mean for investors who wanted to purchase Tesla stock prior to the split, even though it would increase the company's accessibility to more investors and broaden its audience and reach? The benefit of investing now is that should the stock price increase following the split, like it happened in 2020, you would benefit. Stock splits, however, sometimes serve to reignite investor interest in a business. If this occurs, there could be large returns from investing now prior to the split. Whether Tesla's price will increase as a result of the split is anybody's guess, though. Since the last stock split in 2020, the economy has changed, thus no one can predict when this potential split will occur. Because of this, it's hard to forecast how the split will impact Tesla's stock price, even though there won't be much resistance to the plan. Prior to facilitating the split, the company must receive shareholder approval for it to pay share dividends. Only a few days had passed since Google and Amazon had declared stock splits. The shares of Google and Amazon will be divided 21 on June 3rd and July 1st, respectively. GameStop is now doing the same. We don't know when or what Tesla's split ratio will be, but if past events are any indication, it may occur shortly. The second split of a stock in 2 years is actually quite uncommon. The most similar examples might include Amazon's 3 splits in 1998 and 1999, and Microsoft's string of little splits in the 1990s. Nonetheless, those serious split percentages were lower than Tesla's prior split. You might be wondering, like many investors, why Tesla is dividing its stock. A stock split, however, can be carried out for a number of tactical reasons. Typically, business hopes to grow significantly and wants to maintain shares accessible to average investors at a fair price. Employees at Tesla and other companies with stock-based compensation will also have easier access to the shares. There might be more tactical examples available. The Dow Jones Industrial Average DA is a widely recognized price-weighted stock index, for instance. The stock price is a factor that is considered for inclusion in the Dow since it has a direct impact on index weighting. High share prices could indicate that a company is not worth investing in. All things considered, pattern appears. Reuters reports that a study conducted by Bank of America suggests that in the year that follows a stock split, companies that have divided their shares perform approximately 16% better than other companies. There might, however, be an indirect relationship with the expansion of the business and other factors contributing partially or completely. Splitting the stock shows that the business is confident and expanding. On the other side, traders of stocks and options often take advantage of the split environment for trading, which can cause significant volatility in the markets both before and after the split. Compared to the previous stock split, Tesla and its stockholders will have to go through a few additional steps for this one. The stock split on August 31, 2020, after the board just made its decision public on August 11, 2020. The Securities and Exchange Commission establishes a cap on the number of shares that can be circulated by a publicly traded corporation. Tesla is getting close to its maximum and under current regulations is only allowed to split its shares 2-1 without the consent of shareholders following the most recent IPO in December 2020. This suggests that a higher multiplier will be revealed by Tesla. The board of directors will then vote on whether or not to authorize a stock split, which will almost definitely be publicized shortly after. To finish the split, the stockholders will also get a dividend in shares. For each share you own by the cutoff date, you will receive 4 additional shares on the day of the split. For instance, if the split is again 5-1. Yes. How do stock splits impact options? Options are impacted in the same manner as shares. If they expire after the split day, you will receive 5-200 strike calls if a 5-1 split is announced and you have a $1,000 strike call. You have more choices in this situation regarding whether to sell or exercise. While investors are excited about Tesla's recent plans to split its shares, Charlene Reinhardt, CPA, told Go Banking Rates that the change is only cosmetic and won't make your account heavier. Investors should, as we have stated, concentrate on the main business. She recommended paying attention to metrics like income potential, production capacity, and growth in automobile deliveries if you want a shot at long-term success. Additionally, after examining Tesla's finances and goals, the Motley Fool advises investing in the firm only if you think its core business can continue to achieve impressive returns. Experts say that if Tesla keeps impressing investors, it might provide you the increases in your portfolio that you've been looking for. And that sounds even better than an announcement of a stock split. In conclusion, Tesla will merely divide the same ownership pie into numerous smaller portions. The overall value will be the same, as would the value of each of your current Tesla shares. Let's travel back in time to the summer of 2020 once more, when the company divided for the first and only occasion. Between the announcement and the final 5-1 split at the end of August, stock prices shot up. Following that, investors saw that the split had had little effect and some of the inflated market value of Tesla started to seep back out. Now, before the 2020 split, Tesla was destroying the market and it soon got back to its amazing performance. Through that little wiggle in the chart, the market is often a popularity contest in the short term, but it's a useful weighing machine in the long run. Because of this, the stock has risen more than 1,800 during the previous 5 years in the grand scheme of things. The stock split that occurred 2 years ago was a mere footnote. If you are a stakeholder in Tesla, your concerns should be about revenue growth, free cash flow, and vehicle delivery. Now that most stockbrokers allow us to purchase fractions of shares in expensive tickers like Tesla, the specifics of how many shares you may purchase for $1,100 are less significant. The Benjamins are what matter most in the company's financial accounts after all. So whether or not there is the planned stock split, Tesla is a great investment right now. How do you feel about Tesla deciding to divide its shares? Please leave a comment below.